While the US dollar surged on a new tariff warnings from Trump, a Chinese AI model emerged like a genie from a bottle, raising doubts about the future of the US Grand Stargate project. The Stargates might lead investors nowhere as a trading DeepSeek V3 cost $5.6 million. For comparison, trading GPT-4 cost US-based OpenAI over $100 million. It's worth wondering whether Donald Trump will introduce tariffs against China soon, perhaps as early as February 1st. But for now, let us look at the economic data that will close out the last trading day of January. You're watching Traders Calendar. Friday starts with a crucial report from Japan. After the central bank's rate hike, the yen inched up, but it was likely the Chinese DeepSeek AI that had a greater influence. However, the yen later dipped again as the US dollar rebounded. Notably, Friday's data could give a new momentum to the yen, as inflation is expected to rise to 3.1% in January. Additionally, Japan's industrial production is expected to improve slightly, reaching around minus 1.6%. While this remains weaker than last year's figures, it would still be a positive factor for the yen. Retail sales data may also support the yen's rally after a 2.8% increase recorded in November. December's report may unveil a rise to 3.2%. And this will mean that retail trade volumes were increasing throughout the fourth quarter of 2024. This is a strong signal for Japan's economic outlook and its national currency. In contrast, the data from Australia will not favor the local currency. Producer inflation is expected to slacken to 3.6%. While still far from the Reserve Bank of Australia's 2% target, the slowdown could exert pressure on both the Australian dollar and the oil prices. Germany will also release key macroeconomic reports, including retail sales and the consumer inflation. Retail sales are expected to decline from 2.5% to 1.9% in December. In the event of this, the fourth quarter of 2024 could become the weakest for the Eurozone's largest economy. And this could weigh on the euro or at least increase volatility. If Germany's annual inflation holds at 2.6% in January, it may influence the euro trading. Additionally, inflation data from 6 German federal states released 4 hours earlier could also somewhat shape the market situation. The Canadian dollar might challenge the US dollar if GDP rebounds from a minus 0.1% to plus 0.2% in November. However, given Trump's tariff threats, the Canadian dollar will be strong enough to push the greenback down. Meanwhile, US economic data is expected to support the US dollar. Annual consumer inflation is projected to rise from 2.4% to 2.6% in December, with both personal income and spending increasing by 0.1%. And this could strengthen the Fed's case for the keeping rates higher for longer. Moreover, the US economy has so far successfully resisted these challenges. The upcoming regional report on the business activity in Chicago area could further confirm this resilience. If the Chicago Business Barometer rises to 37.2 points in January, it will not just indicate growth, but it will signal a potential trend reversal. Throughout the fourth quarter of the last year, this indicator was falling. A rebound would be a positive signal, and the US dollar is likely to react by moving higher on the trading charts. Please note that the time of publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on Friday, January 31. And now we wish you profitable trading. Subscribe to our channel and follow news with us. And see you soon!